Hello, everyone. We are about to get started. Welcome to the Mind Your KPIs, Top Metrics Companies Should Monitor workshop. Before we get started, I have a few notes on using Teams. The menu bar should be located at the top of the screen where you can find the chat icon to join today's conversation. To ask questions, type it into the chat box on the right side of your screen. I encourage you to keep this open throughout today's breakout. Today's workshop will be structured as follows. Thomas will do a presentation on ways to keep track of performance metrics, and then we will dedicate the second half to Q&A. You can start typing in your questions at any time. I will now turn it over to our moderator, Todd Smith, Vice President of Global Partnerships and Marketing at the U.S. Chamber.
Hi, everyone. Welcome. As Hannah said, I'm Todd Smith, Vice President at the United States Chamber of Commerce, and I'll be your host for this hour-long workshop titled Mind Your KPIs. I'm so lucky to be joined by my friend Thomas Sutter, who's a leader within Oracle NetSuite's Global Solutions Center of Excellence. As you all know, data is a very important tool for business owners to utilize when making key decisions for your businesses. So we'll be learning from Thomas today on some of the top metrics that you as owners and leaders of your companies should be looking to track to better inform your business decisions. This is an interactive workshop, so as you have questions, please type them into the chat and we can ask Thomas during the presentation the questions that you have. One of the fun ways we wanted to kick off is Thomas is actually joining us from London. So as he begins this presentation, we'd love to know where some of our guests are joining us today. So please feel free to type in the chat what city you're in today as you join us. I'm excited now, though, to turn it over to Thomas to lead us in the presentation. Thomas, thanks again for being here, and we look forward to hearing your presentation.
Great. And can you hear me okay and see the screen?
Yep. Hear you great and see the screen.
Thank you. Yes, my name is Thomas Sutter. I'm a career finance director and controller. Spent my career in finance teams. I've been in Europe for over 20 years. And I was often reporting back to U.S. parent companies, so I had to deal with their accounting standard and currencies and everything like that. But at the same time, I had to deal with all of my own local, kind of consolidations, compliance, everything like that. And the last company I was at, after 3 years, we implemented Oracle NetSuite, and so I got to see one, company actually kind of make that switch from the older on-premise type technology to, a true cloud system. That I'll mention a little bit today. But ultimately at this role I have at Oracle NetSuite, I'm that Finance and Global Solutions Center of Excellence. So I'm not the salesperson, so I'm not selling, I'm not demonstrating the system, I'm not building the product, I'm not even implementing the product, but I do work with all of those teams because I know what finance teams really need, and what's best for them, and how do they get where they're at today with the older technology, and actually where they want to get to with the newer type of technology. And a hint, when I mention technology, you'll see later on, it's actually more than just technology. Technology is just one of the pieces. So really today, I'm just going to quickly, in this first half of the session here, I'm going to try to identify the KPIs, but it's really also to describe kind of the best practices, and then it kind of explain how, you can actually steer your business, going forward. So again, first identify, and this is Guttarts Law. If you've ever kind of thought of this before, even if you didn't know what this was, you probably could easily see what's coming, which is that, here it's talking about, if you measure people on the number of nails made, well, of course, then they're going to make a lot of nails. If you talk about weight, well, then of course they're going to give you as much weight as possible. It's almost like common sense. It's kind of psychology. There's so many examples of this. I think it was back in years ago, it was in the Soviet Union. They had sheet glass. They did that, and so they said, great, we're going to reward the manufacturers based on the tons of glass produced. So of course they made extremely thick glass. You practically couldn't even see through it. Then they said, okay, we're going to change the rules and we're going to reward them on square meters. Okay, great. Now we're going to make it so thin that it's extremely fragile. There's another example. It was back many years ago, kind of near in Georgia. I think it was at Fort Benning, Georgia, but they basically they gave bounty hunters. They gave like $40 for a bounty for every pigtail that was turned in, because they were trying to cull them and things like that. But of course, what did people do? They went to the butchers and slaughterhouses, bought the pigtails, and then went back to the army and got their $40 kind of for each pigtail. I think if you go way back, when they were first building the trains, they paid the builders per mile of track laid. Oh, okay, well, sure enough, they decided to lengthen it and made kind of a bow shape of unnecessary track just so that they could get paid more. So you always have to kind of, the whole key here is that you don't want to come up with a KPI or a measure and make that your target, right? Great to have a KPI, great that it helps you. It's just, you got to be careful. If you're making it a target, you need so much more kind of analysis and KPIs and things in place to make that, effective. So, that's kind of the first thing I wanted to say. The second part here is therefore when you are starting to do this, you need to align your tactics, right? Look at different things. And the first one here was just talking about those target opportunities. You need to start to, absolutely, quantify it, prioritize all those opportunities. What you're trying to do is look at everything you're trying to measure, because you have so much data and you have these opportunities out there that you're trying to move to. Always keep that in mind first. The second is, well, how are you going to motivate people? When I was in a finance team, one of the things, we had salespeople who would sell it, but there was so much information in the sales order process that when it came to finance couldn't just have the system automatically send out invoices, because they would have been wrong. They had the wrong address and contact details and things like that. And so we had to put in place a way to say that, how many times, that you're getting commission for selling it, sure, but you're also getting part of your salary and commission for getting the paperwork right. And so we had to put these things in place to drive that desired behavior, to get them to focus on getting things right. And of course, we always know that in a finance team, you have to kind of justify the investment. So of course, you're using that as well. So if you're investing in, new operational type technology, or you're investing in people, in certain departments, hey, for sales and things like that, you need to then, there has to be that justification of what's going on. And so everything you can imagine, all this data, when we're talking about these key performance indicators, these are the kind of areas that you're trying to focus on, which is targeting opportunities. Yes, you want to motivate people. And of course, you want to justify the investment. You need to have the KPIs in place to analyze the data better. And of course, then people can look at that as well. You just want to go back to that first point, which is just be careful that it doesn't become a target. But I'll mention a few things of how you can kind of manage that.
I love, Thomas, I love the point you made about motivating people. I think that's a huge for our audience to remember, is KPIs is as much about our business. I mean, our people are our businesses, and KPIs can be utilized in ways to help us motivate people or incentivize people in ways that we had never been able to do previously in our business. So I appreciate you making that point.
Yeah, trust me, we'll talk a lot more about people as we go along. And this is talking about, you can Google so many different terms, business process management, the business alignment model. Ultimately, you're always trying to get to the same thing. It's always talking about the vision being clear, strategy aligned, support one another. Keep in mind that support one another, meaning you're not trying to use just a single indicator for how a team or department or anything is doing it. You don't want to look at one thing. You want to talk about that everything is aligned. And when we also talk about support one another, we're talking about maybe different departments, different individuals, that actually everything supports it. So, a finance team, is a finance team getting their month end done by a certain day? Well, who else is going to support that? Well, you need the timesheets. You need to know the accruals of other departments. So again, they need to have some also kind of tasks in place, and they should also kind of have an indicator as to how many of their tasks did they get done that was outside the finance team? And again, this is all because everybody's supporting each other. Of course, the other departments need information from finance. They need the budget information and things like that. Are they over budget, under budget? And so they're going to need information. So again, everything is supporting one another, is the key. You know, critical business goals are clear. I'm going to show you on the next slide in a second, but it's driven by the leadership team, but it involves so many more people. It's not just the owner of the company. It's not just the board or anything like that. It's actually, you know, everybody needs to be kind of participate in this. You know, establish a broad framework for performance improvement. And again, you're thinking, how am I going to do this with what I've got in place right now? Because what you might have in place right now is that you're already overworked. You're working more than 40 hours a week. You're working till midnight or weekends. How am I going to kind of make improvements? Well, again, that's what we're going to go through. You know, what can you use today in order to give you that time? Because again, the key word in this third point is the improvement. And of course, the last one there, it's the combination that always you're looking at long term, but you've got to look at the short term as well. And that's ultimately here on the next slide, which we were going to talk about. So you're looking at things from the bottom up, right? You have all your projects and tactics. As you go up, these kind of key performance indicators are going up to that next level, right? The broad initiatives, they go up to the strategic objectives. And of course, then you've got that mission, kind of the company goal, that real thing that they're trying to meet at. Now, again, I went there from the bottom up, but at the same time, if you look on the left-hand side, you have to look at these together, right? Everything has to be kind of coinciding that, you know, if you're looking at your mission goal, well, how is that affecting the strategic objectives? And further on down, or if you look at the right-hand side, you can see that as the company is setting a goal, well, that will actually affect what your strategic objectives are. They affect the next level down, that maybe, again, not the senior leadership, but maybe it's the team leads are setting the broad initiatives. And then the individual, what is each individual trying to accomplish? But it's not just going down, it's going up as well. So I kind of, and it's almost a circle, right? It could just keep on going, that everything is affecting. And it's, when I say this is over time and making improvements, that's what I'm talking about, is that you have to, you're setting KPIs, and hopefully not just to set a KPI to reward somebody. You're setting KPIs so that you can identify where the improvements need to be made. And that's why, again, it affects then the things at the top. So if the company says, hey, we want to close the books by the 5th working day of the month, and then everybody starts making their objectives, well, the individuals at the bottom, they might have 5 tasks each day. That's 25 tasks. Now, if the individuals at the bottom are not getting their tasks done, that doesn't mean they did a bad job. It means, wait a second, maybe it was the original objective of 5 days that was the problem. Or maybe other departments and individuals need to do things before the month end even, you know, starts day one. Certain tasks might need to be done. Or maybe some of those individuals have too much to do. Maybe it's that, you know, that things are in the wrong order, or whatever it is. The bottom line is everything is affecting. You're using your KPIs and adjustments. And again, I'm using a finance team purely as an example to say that it doesn't necessarily have to be only financial numbers. It can be anything within the system that you have, any data that exists out there. A lot of times the data isn't in a system. It's all on different paper. And that's, of course, one of the objectives that we'll talk about, is how do you get things into something like technology that can then do a lot of this analysis. But just these are just some of the key ideas of, when you're thinking of KPIs, everything knocks on another, and it just goes in a circle. And you can't just think it goes from the top down. It actually also affects things, you know, from the bottom going back up.
Thomas, do you have
Yes.
any advice for some of our listeners with regards to how you weight maybe the different voices or constituents within your organization? So I think it's a great point, right? As you're setting KPIs, you should be thinking bottom up, top down, understanding how it's going to affect everyone in the organization. But ultimately, the exec team and leadership team are also there to make decisions for specific reasons without alienating, right, some of the folks that are more, as you mentioned, doing the 25 tasks a day. So any advice you'd have for the audience, just in terms of how you should solicit insights?
Yeah, think of it like, you know, respect and everything like that. It's, you're trying to, you want others to respect you, but in order to do that, you have to respect others. If everything works from the top down only, then the people at the bottom will look at it more of a job. They won't look at it as they're part of a team. The people at the bottom will then go back to that first law that I was talking about, the Guttarts Law. They'll start to just say, okay, I've been given this task, and my only focus is to get that task done, even if it doesn't help the team as a whole. They need to be able to see that that their leadership is actually going to listen to them and make those changes. That's the going back up, that things are actually going to affect and change. And in doing so, then people say, you know what, I'm not worried if I don't hit a certain target, because I know if I don't hit a certain target, we'll actually start to maybe change a few things, and everything will just change in the circle, and that type of thing. Because we're all a team. We all know that we're all really trying to hit that very, very top kind of goal that the company wants to hit. So that's how I would kind of answer that kind of question, if that makes sense.
Thank you.
Yeah, great. And so, look, I know that a lot of people have dialed in to hear about that one KPI that should, absolutely be the, this is what you should be monitoring and measuring. I think what I'm trying to do instead today, because again, if you Googled it, you're going to find all the different kinds of things. It's hard for me in general to talk to people to be able to say what that one, or few KPIs should be, purely because I don't know your business. I don't know your industry. I don't know where you're at and what your objectives are. Every single business literally would have so many different permutations for what they need to hit that I can't give that one single answer. We can talk about it and things like that a little bit, but at the same time, it's in talking in general. I have to talk in general, because again, there is no one single win kind of indicator. So let's talk about the best practices of how to achieve what we've been talking about. And really, the first thing here is kind of the bean counter. This term is over 100 years old. It's referring to accountants, right? We are so precise with the numbers, and effectively every single transaction that we're processing every day, that's been our job. It's never going to go away. That's what we need to do. But the problem now is that organizations now also want those same accountants to be a key part in helping to grow the business. It's like a second responsibility. It's totally separate. But that first B counter role involves ensuring there's a great control environment, right? Payments are correct, closing the books on time, everything's accurate. This kind of strategic business partner role, this is where you see all, view all, and you understand everything. You're effectively trying to interpret what's happening with the business and feed it back to the others so that it's meaningful, actionable, and insightful. Now, you've already been doing this before. And like I said, you're probably spending so much time on the first role. How you're thinking, how am I going to make improvements? How am I going to help things grow? So the bottom line is, in order to improve all of this kind of business partnering and everything that you want to do, you're going to have to change something. You can't continue as you used to do, just doing things manually and things like that all the time. So how can finance even keep pace with these type of things? You're trying to ensure that there's a strong control environment. You're doing those two roles. You're making sure that you're compliant with everything that's changing, because the industries are changing, the government rules and regulations are changing, and your business is changing, right? Everything is affecting all the departments are changing, especially in the last couple of years. Everything's changing so much. And then, on top of that, we add in kind of this kind of pandemic that we went through, where most businesses, they needed to look more closely at actually future cash flow, right? They still had to close the books, that first job. But, everybody was also working remotely. Businesses are now starting, have been shifting back to offices. People are trying to decide what tasks are we going to do in the office, which one's out. All of this is just adding to that difficulty factor that things are changing so much, and everyone's looking back at the finance team. Now, record a report process. Oh, go ahead. Did you want to ask a question, or?
No, we didn't have a question on that point, Thomas.
That's fine. The the record to report process. I like this. I wasn't the one who created the slide, but I liked it purely because I liked the idea that I hadn't thought about it before. That closing the books and everything. It's like an assembly line. It's everything. There's steps along the way. All these tasks that I was talking about earlier. Maybe setting KPIs, but you had to receive one thing from some departments before you could even do the next step, and it just everything built on. And it was literally closing the books is like an assembly line. The problem is you're getting only these results and information, but it's only at the end of the period. And when you need information so much faster nowadays, the end of the month was fine back when things moved so slowly that, companies would do the same thing for years. But now things are happening so fast that they need the information quickly. Now, the process is not broken, right? It's failed to modernize. But I thought of it and I thought, but why has it failed to modernize? It's failed to modernize because finance people, regardless of the technology, the processes, or the people that the finance team are given, we get the job done. That has been our job from day one. We will get the job done. We'll work till midnight. We'll work on the weekends. I've worked on holidays before. We get the job done. And the problem there is that when then companies are thinking, well, where should we invest our money in? They're thinking, well, why do I need to invest in finance? We're closing the books. We're getting the information. The auditors are sometimes happy. The bottom line is they see that the invoices are going out, money's being collected, invoices are being paid, employees are being paid. They don't actually see a reason, or hadn't in the past, hadn't seen a reason to modernize. But that's what needs to change, is that the people at the top need to realize that this can't continue. It doesn't have to continue. There's things available to make this work now.
Thomas, I think that's a really strong point. And whether it's the finance department or other departments, the sales department, is just because a specific department or organization is hitting their numbers and looking successful from the outside, doesn't mean that leaders shouldn't take the time to look internally and figure out, is there ways we can be doing that even better? So just don't take the wins as their wins, and we don't need to assess it. It's the wins are great. We can even potentially make that better, and let's look under the hood a bit and build out KPIs, or like, as you said, ask questions. Do you think that is responsibility falls on leadership? Is it a combination of leadership and also the folks doing the task of raising their hand and saying, just because we're executing it successfully doesn't mean we're doing it in the most efficient way?
With the executive team, the CFO represents the finance team when talking to leadership. So that really does come down to the CFO making sure the rest of the executives and the board knows that what's going on and what needs to change. And it's really that person's responsibility to influence the board, to be able to say, look, we get it, that when the company first started, you had to build a product or service. You had to make sure you could sell it, make sure you could deliver it correctly, and make sure that that we knew this company is going to continue and take off. Because during that initial part, absolutely, finance is on the back end, because they don't know if this is actually going to work out or not. But once you know a business is going to keep going, especially if there's any growth or uncertainty and changes going on, then you need to be able to say, we need to now invest in the finance team, and we need to move it away from this assembly line type thing. We need to make improvements so that we can help and business partner and work with the rest of the business. And actually, that's going to have a lot of good benefits as well.
Got it. Helpful. Thank you.
You are about to enter another dimension. It leads to the future. Not a future that will be, but one that might be. This is not a new world. It is simply an extension of what began in the old one. A journey into a wondrous land whose boundaries are endless. You just crossed over into the continuous accounting zone. is my small intro for that one there. I mean, honestly, it is a new world. And trust me, I know the first thing you're thinking of is, how could I possibly deal with my day-to-day job and at the same time do month-end tasks and do them every day? I get it. If you're using the same technology processes and people that you're doing right now, absolutely, it is not possible. And so that's what we'll talk about later on, is exactly what you should be looking for in those areas. but this whole continuous accounting, it's technology and process driven. You need to balance everything. And so again, the first thing that mentions there, the modern cloud, I mean, this is where you're having that single database. All the data is there. So all you're trying to do is make sure the data gets into the database, because then in the system can have all the rules for all the processes that are going to happen, whether it's notifying somebody that they need to look at something to approve it, or a calculation might be done, anything like that. Once you get the information into that single database, you can just set up for the entire company all these rules, and then from there, then all the reports will get the information immediately. So again, the first thing you need is this kind of modern cloud, true cloud type technology in place. The continuous global consolidation means you're not just saying it's for my one division, my one company. It needs to be that it's for everything. Okay, everything continuously global. And then at the same time, you're thinking, wait a second, accounts payable, accounts receivable. Well, of course we process that on a daily basis. Invoice it. Well, absolutely, you already are. But it's the way that you do it, the information that's going on, the functionality that the systems have can actually make sure that not only is this more efficient, but there's so much more that that is tied to it. Just think of something like accounts payable. Well, that has maybe fixed assets are on accounts payable. So there shouldn't be a month-end process to even look at depreciation at the end of the month, other than click a button, post a depreciation, because everything has been done on a daily basis, continually or weekly. It doesn't have to be daily right away. The bottom line is it can all be done, so much more on accounts payable, accounts receivable can be so much more effective that when it comes to the end of the month, there isn't a lot of decision making. It's just, let's run through another day and we immediately know how much potential bad debt we have. We know immediately what those fixed assets are, what to do with rev rec, because everything's been processed. And it's the same for reconciliations. It's don't wait till the end of the month just to do a reconciliation. You can actually have things reconciled, not just a bank account, it could be prepaid expenses, anything. You can have so many more things that are actually reconciled on a regular basis, so that at the end of the month, it's just doing one more day's worth of reconciliation. And ultimately, in order to get all of this, you always have to think, I need the visibility of what's going on, KPIs, whether it's information, what do you do? Everything's about visibility. And then from once you see something, how effective are you? How efficient are you at doing whatever you need to do with that information, whether it's good, bad, or just a task? And of course, if things are automated, that's going to help so much more. And then, of course, you get then go in a circle. You get the visibility of what happened with the automation. And I'm not saying to automate everything. It's the visibility of what was an exception. Because you're not trying to build, especially on day one, you don't, even if you tried to build everything automated, if your business is growing and you want to change something, absolutely change it right away. Just have the visibility of what is now an exception. And when those exceptions grow, that's when you look back at how can we actually make the improvements to the system and make it more automated.
Thomas, you're getting a lot of compliments on your introductory voice. The question was, is there a KPI that helps you get to that level of voice narrative?
So I think it's because I'm not trying to overly present or sell anything. I'm just trying to kind of, in my head, I'm just thinking, hey, what if only two of us are sitting in a room? What would I try to explain to you to get across type thing? Yeah, KPIs on the voices. I guess I haven't done that on myself, which is overly. I've done these type of presentations, but I haven't actually sat down and set myself a KPI for my own presentations. I probably need to do that.
Just shows how the breadth of opportunity when we're thinking about KPIs. Sorry to interrupt, but
So,
on that introductory voice.
Sounds great. Okay, so again, we're in the last section now, right? We're talking about, okay, how are you going to get all this done? Okay. I've already mentioned it, right? It's not just technology. Yes, the technology is one of the things. The single database absolutely helps. A key one I haven't mentioned yet is the ability for you yourself to make changes. If you go back to when you had software that was on premise, and companies like Oracle had created great software, but it took a while to implement. They did a lot of coding and scripting to say, we're going to take your processes and the way you need to analyze everything. We're going to build it all out, which was great. Problem was, you couldn't change it that fast. You'd have to hire new people to create new reports and new fields, new workflows of what to do when certain data hits that field. What are they going to do with it? All of this would take a long time. So you basically stuck to your technology, and all of your improvements were made on the processes outside of the system. What you need is the technology that says, yes, the end users, they don't have to be accountants or IT people. They just need somebody to want to learn to use the system. And it's all drop and drag, tick boxes, little selections. It's this type of stuff. That's the type of technology you're looking for. Something that makes it very easy for end users to make the improvements. Because you don't want to go through a year's worth of implementation. You'd rather implement it in 3 months, use it for 7 months, and actually by the time you get to the end of the 7 months, what's happened? You've made improvements and changes along the way. You've learned the system. So try to, they always talk about use standard functionality as best as possible. It's true in the fact here that yes, use standard as best as possible, but then later you're going to make these changes and stuff like that, but you want to do it yourself. And that's a huge bit of the technology, because then when you get to the second part, the processes do not have to be all internal within the system. Mm-hmm. The processes can be external as well. You might talk about revenue recognition and things like that. Yes, the technology can automate everything that's standard. But for those exceptions, great, you got the visibility of what's an exception. Then there's a process that you run a report, get the information outside of your system, do the calculations externally, and then maybe upload the results back in for what needs to be recognized for those exceptions. Something like that. To me, that's part automated process, but there's a process. You're never going to get everything in the technology. When you receive, post mail, every day, there's a process for who has to open that. What are you going to do with that document? Who does it go to? None of that's in the system. There's so many processes. You're never trying to get everything in the technology. But what you do want to do is make sure you identify what they are and what is taking up the most time of your people and where is the high risk of an inaccuracy. Those are the areas that the people need to do. They need to make improvements as you go. And so when you see that things are taking too long or there's high risk of inaccuracies, then how can we get that process and get that stuff back into the technology and make it more automated? Maybe you have to standardize something, first. But that's, to me, you need all three of these. You could pick any two of them, and if the third one is not working properly, then it's not going to be successful. You will have problems, and this could be in anything. It could be just in the process of you determining your KPIs and your key performance indicators. It doesn't matter how much we talk about this and you understand what's going on. We might build out processes. If we don't have the right technology, it's not really going to work. So, or you could get the best technology, but if you don't have people to improve those processes and make improvements along the way, then it's not going to work. So, like I said, it takes all three of these. Never think that it's always just the one technology.
Thomas, do you have any advice for our small business leaders watching today whose technology budgets, at least in their mind, they may not think it's high enough to compete at specific levels, but as we know, we can be very efficient when it comes to budgeting and technology. So is there any advice that you'd have to share with the audience?
Sure. The key is that with today's kind of true cloud technology, and when I say true cloud, that means everybody is on the same version of the software. Oracle NetSuite now has over 27,000 customers globally. One of those customers could have hundreds of subsidiaries and entities, and they're all using the same product as somebody else that has two people, in a garage or garage, as I would say here in London. The bottom line is those two people could be using the same exact product and version of Oracle NetSuite. But how can they afford it? Well, it's because you only pay for what you're using. So it's kind of like that pay as you go type thing. And yes, of course, then there still could be a kind of budget concern. Okay, I do understand. As you're growing and things are happening with your business, and the more you want to make improvements, there's always that point in time where you say that, because you never want to be late, right? If you're in a situation where you're thinking, oh, we should have had better technology now, then but now you have to go and select it, you have to implement it, you got to learn and train about it. You're so far behind, it's going to cause problems. So, and nobody ever hits the exact same day, right? That says, great, we just turned on the system the day we needed it. But I always think about what happens when you're early. The only downside to being early in this, I said it was about that budget constraint. The only issue here is that it costs more than but what you were thinking that you really wanted to pay. So that's the only problem. That's the only downside. Luckily, like I said, you got the pay as you go, so you're trying not to pay as much. The key is, don't think of it as wasted money, because you are going to use that system and technology, and you're going to make improvements on the way. Every day you say, let's add some more data. Let's change the workflow for what needs to happen with it. Let's actually add a KPI. Let's improve these reports and all this kind of stuff, and improve the dashboard, the visibility, the efficiency, the automation. Everything you do every day, every week, every month, that's going up the stairway, improving that system. And the key thing is, the day that you get to the point where you're saying, wow, we're really glad we have this system, look where you're at. You're all the way up the stairway. You may not be at the top yet, but you're up the stairway. If you had switched even on that day to a new system, you're on the bottom of the stairway for that system. You're trying to train it, learn it. You haven't made the improvements. So again, you are getting something out of it. And a lot of it is the training and going up the stairway. So I'm trying to just make sure people don't always think of just the budget and that you're only paying more. You have to look at what you're getting out of it as well.
Helpful. And have you seen a sweet spot in businesses? So some of the questions we're getting are around, does it make sense for a business to hire a KPI lead or a strategic and planning lead? And if so, have you seen a sweet spot and maybe when businesses should think about hiring a dedicated staff that oversees, because you mentioned the technology process and people, when should there be a person dedicated to overseeing this?
Sure. I mean, this is probably stuff I might have mentioned later on. I've got a few more slides, but it's happy to talk about it now. No, so really, look, it's the people, right? If right now, you don't know what your people are capable of. They're doing the same thing every day, every week, every month. This is not why they kind of got into the business of being an accountant in a finance team. So, if you have finance staff right now, it's not necessarily about hiring more people. And I'm not saying when you get technology and processes, that means you could have less people in the finance team. I'm not saying that. The key is you're freeing up their time. That, and in fact, I'll go on to the next slide, saying that if you get the right technology process people in place at the bottom, getting your day-to-day stuff being done, the steward side is actually making sure it's all legally compliant and everything like that. Your operator's keeping the lights on. But if you get this good foundation, this actually is then it's going up the stairway. And now this catalyst, the top left, that's being your business partner. That's saying you've got the people. Now, because you freed up their time and you've made those improvements, they're doing continuous accounting, but now their daily workload is maybe half. Whatever it is, they've got some additional time. Give your accountants, the people, the time to be this business partner, right? The catalyst to help drive the execution of the business. Let the finance people go to the meetings of the marketing sales, even somebody with the board. Let them listen in and figure out what is it, what more do they want out of this technology and the systems, the data, the KPIs. Let them tell you, because you'll then go back and it'll be reactive at first. You're going to listen to them. You're going to be reactive as to, how can we create better KPIs and things like that. And like I said, it's a circle, right? It's going to keep on changing and moving. But at first it's going to be reactive, but you'll see a point in time where all of a sudden you're like, wait a second, now I've been in these meetings enough. They've asked for things. I see where they're getting to. I see what those top executives are thinking of where the company should go. You know what? Actually, you'll see the point where you become proactive. And when you're proactive, is when you then go to them saying, oh, you haven't asked for certain things, but look what we can give you. We've got the technology process, people are all in place. We can actually now give you even better information, things you hadn't thought of that you got at month end. Now we can give this to you on a live basis. Might not be the exact same thing, but it's all those pieces that will let you know what's going on. You still may get the month end stuff, but here's a lot of pieces you need to see live on a monthly basis. Now, you were talking about, well, when do you hire the people to do this, to be the specialist? And I'm saying you already have those people. The finance people that you have are educated, they are experienced, they know your company, they know your business, but they're spending all the time down here at the bottom just trying to be the operator and making sure that nobody goes to jail for fraud or anything like that, for incorrect information on the steward side. And they're spending all their time down here, that if you free up their time with the right technology process people in place, I think your people will actually surprise you. You may realize that you actually have a superstar sitting in your finance team already.
Got it.
And that you can then give them the opportunity to do all this business partnering. And again, the strategist side is basically, yeah, of course everybody wants to be the strategist, but if you can get all of the other three faces here working effectively, then the strategist side becomes so easy, because the rest of the company knows, the board knows the rest of the company is operating effectively, efficiently. And if they see an opportunity, which they know your competitors see the same opportunity, it's who can get there first, the best, the most established, all that kind of stuff. And the board actually has faith in the company to make these things happen.
I really like that. I really like that phrase you used, business partner. I think that's a great phrase for a lot of us to hold on to.
It actually started, that term, I think, was around 1985. That was when the very first .com was also established. Wow. New Coke, if anybody remembers New Coke, that was 1985, and that was the first time they ever used the term business partner. But only the large businesses dealt with business partnering in the past, because they didn't have the right technology process and people in place to make it totally effective. Now that you have the opportunity to have all of this in place, it gives the finance team, now sitting at the center of the company with that single database, to now say to people, what do you need? Let me help you get that information.
Very helpful. Thank you.
And honestly, this is Oracle NetSuite's dashboard. It's, we're talking about the KPIs. This is the dashboard to basically say, what visibility do you want? And, the dashboard is tailored for each individual person. A financial controller will actually probably want different dashboards, one for the daily, tasks, but also maybe a different dashboard for all those month-end tasks, right? To make sure we get the things done. Continuous accounting, it isn't just turning on and you're immediately going to be on continuous accounting as soon as you flip the switch. You make improvements. At first you're saying, hey, maybe it's weekly, or maybe there's just a few tasks that are daily. The bottom line is you make improvements. And the idea here is that you have the visibility, no matter what your role is. I had a dashboard, actually, one for the morning and one for the afternoon. I wanted to know what was going on in the morning so I could help people. If I knew that some of my finance team were behind on their tasks, it wasn't a KPI to say you did a bad thing. It was how can I help you? Yeah. There's lots of reasons why somebody would be behind. What I don't want them doing is lying to me, telling me, oh yeah, everything's fine, and then they work till midnight. That's not what I wanted in my finance team. But once you see the visibility, how efficient are you at then getting something done? How many clicks away is it? How fast is it? Because you can make a decision quickly. You can see the data. How effective are you at getting to that data that you need to either do a calculation or make a decision? And of course, yes, the more you can automate, that's when you realize you're spending way too much time doing certain of these tasks and stuff like that. The last kind of things, this was a Charles Darwin quote. The key is that, look, the species that survives is the one that is able to adapt. We're talking about One of my favorite movies was the Clint Eastwood in Heartbreak Ridge. It was improvise, adapt, overcome. That was like the Marines. Absolutely. Finance teams, businesses all need to do the same thing, right? But if you don't have technology process people in place, you're not going to have the time to even look to decide what needs to change, let alone then think, well, great, now I have no time to do it, even if I knew what was going on. And today's the AAA here, this phrase here, today is the age of accountants and auditors. But I just kind of want to make a point. This is not to continue as we were before, but this is to evolve. It's the age of accountants, right? The people to evolve using technology and process to automate more. Internal auditing, right? You're basically internal auditing should be ensuring that the automation was correct. You're managing those exceptions. You're improving the technologies to automate more. But then that means you can then be, here's another term, accounting engineer, to use the data to be a business partner, to help influence people. You're kind of like being a storyteller, a data scientist. And so, all you need to do, accountants, right? I already talked about it. You've got the education experience, your business, know your industry. You just need to use the technology process to help free up their time. Mm-hmm. If you can use that to be more efficiently, that is in this new age. And the auditors as well. Auditors aren't testing things manually anymore. They're using the technology as well. They're kind of being like a security governance and commando. That's a term that somebody used one time. The bottom line is finance teams should be going up the stairway, improving towards continuous accounting, trying to be better able to be that central business partner for the entire business. But that is not the future of finance. It's actually today. And I want to contribute that quote to myself. I can't find anybody. When I came up with this last year in 2020, I haven't been able to find anybody that actually said that before me. So I will put that quote to me.
There you go.
That was kind of the. Do you have any other kind of questions and answers and things like that?
Yes, please. For our viewers, now is the time. We have about 10 minutes left in this workshop, so please type in your questions, and Thomas and I will be sure to get to them. I think, Thomas, one of the questions we've been receiving is a lot of our small business champions, they have to wear a ton of hats for their company. So from owner to operator to head of sales, head of finance. And now as we're talking about more of this head of strategy, head of KPIs role, that could seem daunting as another hat on top of multiple hats they're already wearing to put on. How can we help them understand that it shouldn't be daunting and it's actually something that can make them maybe minimize the amount of hats they have to wear, and the best way to start this process for them?
I think the first thing is, don't think that you're trying to jump all the way up to the top of the mountain, right? It's a long road. You don't have to go fast. Mm-hmm. It's a constant improvement. So don't think that all of a sudden now, you have to all of a sudden start thinking of KPIs and everything like that. The whole point, I think, today, if you're taking one thing on board, it's just to know that there is the technology out there. It's not just technology, it's process and people. The key is just look at those three areas and try to get a good foundation in each. If you have a good foundation in all three of those areas, then you can just start going up the stairway, making the improvements. Just adding one new KPI. It doesn't have to be per day. It could be one per week. Could be one thing. It's, just when you have time. Again, you and I could think about, hey, here's a KPI we should do, but great. How are we actually going to get the data to, into the system? And how are we going to get the data out of the system to actually then populate? And then how do we distribute that information? And you're just thinking, if you have the right technology process people in place, then it's so much easier to, hey, I've got some time. Let me think about this. Let me have a meeting. Let's figure some things out. And, you're just making these small little improvements each day. When you go back in time, you want to be able to look back. And I'm not saying a year later. I'm saying, every few months. We used to have the quarterly meetings, right? Quarterly team meetings. We would look back at our team meetings to figure out where are we spending most of our time, and where do we have a high risk of inaccuracies. And every 3 months when we had that report, everything changed because we had made improvements. And so some of those things weren't on the list anymore. And so again, it's one of those things where, and even for small businesses, just get the technology process people in place and you can then make those improvements at your own pace when you need to. Sometimes it's slow. Sometimes you'll see that it's going to be fast. Things are changing in your world, and you might need to make a lot of changes very fast. But if you've got a good foundation in place, then you'll be able to adapt and improvise. Your period of adapting becomes smaller. And you think about in the last couple of years when things changed. If everybody had to change, but the ones who had a good foundation in place could change quickly, could change very fast. Whereas if you didn't have anything in place as a foundation, then those people and businesses, et cetera, it took them a while to adapt and change. And so, get that foundation in place in those three areas.
Helpful. We're getting questions around at what stage of a company would you recommend either hiring a full-time CFO or bringing on an advisor to help from a budgeting perspective? Do you have any thoughts there or advice?
So it's looking at your business. So, when you talk about a finance team, right, you've got somebody there. It's when do you need the finance team? And I mentioned this earlier. When do you need the finance team to be represented at that board level? So if a board doesn't have a specific CFO, they might have a director, controller, whatever you want to call it, but they're not at this position that literally is at the board level. And they have almost like an equal seat at the table with the others. The time when you need to get that is when you realize that the finance team, everything, the company's growing, and you realize that the finance team need to have a seat at the table. I think that's kind of the trigger of when to move from just a controller, director type thing. And the CFO is an executive, and they may not always feel like they have an equal seat at the table. That's because they're spending all their time at the bottom, helping out their finance team, trying to deal with the day-to-day stuff and accuracy. And if you don't have the accuracy, the board are saying, okay, every time you present numbers to us, they keep changing every month. And we don't get anything during the month and things like that. So that's why they're like, they don't want you to have an equal seat at the table because they want you to concentrate on that first bottom level of getting the operator and steward level done. So that's why, again, if you get things in place and start getting into the business partnering, then they'll see that they'll even give the CFO that equal seat at the table.
Got it. And for some of our business owners that are watching who have not previously had to hire a CFO or finance specific position in the company, do you have any recommendations for questions, thoughts, ways to really thoroughly vet applications or, a prospective employee?
Yeah. So, kind of what you're looking for is, and again, we use the term, you've heard it before, someone who thinks outside the box, et cetera. Because the world's changing, you can't just say, well, this is what I did with my technology, process, and people in other companies, that type of stuff. And, and that works somewhere else. You need to be able to have people that can say, what technology is out there, what processes are we going to put in place, and what people are going to drive this. And I think it's those, and again, I keep repeating those three over and over. I do talk about it all the time. When you're hiring a CFO, you're not looking, you don't need a CFO that said, oh, I passed an exam at the top of the charts, or I had certain grades in school. I have, because all of that, I mean, you could hire somebody else. If they have good soft skills of how to communicate, then they can actually go and talk to the accounting advisors to say, oh, by the way, what are the accounting standards? And, oh, how are they changing? And then go talk to the technology, the people that you have the technology with, and say, by the way, how can your technology meet these new requirements? And then go to the technology and say, okay, do we have the right people in place to make those improvements in the system to deal with new? So you don't necessarily, it doesn't have to be someone that has, done all of this, like certain education, certain knowledge. They need to have soft skills for all that communication, especially CFO. It has to be that they have to be able to talk to and influence the board. So those soft skills of influencing people, and it's not just the CFO that needs these soft skills. It's everybody in the finance team. So does the CFO have the soft skills to also help train the finance team? There's so much involved at the CFO level. Often, usually what happens is they hire a CFO for one specific purpose to like get funding or something like that. I get it. That person needs to have experience in that one area, but you're going to find a lot of candidates have that experience. And when you're trying to then weed through all the others to find out who's the best one for you, I think there's so much more you can look at, when you're talking to CFOs, the comments I've made that you might be taking on board.
Helpful. Well, as we wrap, we're getting a couple questions just from viewers in terms of how they can learn more about Oracle NetSuite and specific offerings for their size business. Where should we be pointing these folks?
Now you're asking me to be a salesperson. If you just go to Oracle NetSuite, if you go to like netsuite.com and you're logging in and you're asking, basically, you can see a lot of information online, but you're basically just asking for someone to contact you because they can walk you through all the details. There's a lot of information out there already online. But if you just go to netsuite.com, they've got a landing page and a way to ask for someone to contact you.
Got it. Thomas, it's been a ton of fun. Thank you very much for the last hour of insights and education. I appreciate it.
Yeah, thank you and everybody else for joining. Thank you.
For our viewers, please know the next workshop that is right after this is called Building and Growing an E-commerce Business. So you can just join that workshop by clicking on the event hub, which is in the chat right now. But thank you all for attending. Thank you all for being here. And best of luck to you and your businesses. We'll see you all very soon. Take care. Thanks, Thomas.
Thank you.